So what do you know when you see someone doing a cash flow in ink? You know they're really good, or they've never done one before, right? It's really cool if you have a great computer with a lot of default variables, because then what can you do? You can set all the default variables that we're creating here, and you just keep hitting the buttons. And how many of these can you produce? You can produce as many as you want. What I've seen is people produce them till they get one that works. Pick one. We got to be able to do better than that, huh? We ought to be able to do better than that. So now, let's take a look at just line 9, and let's compare my line 9 with yours. January, a loss of $8,300, correct? Let me just give it the proper color. What color shall we use?
Red.
Red. February, a loss of $4,700. Then it turns positive, and we got 59, 16, 7. April, May is what?
20.
That's the big one. And June, 16, 7. And then you can read the rest of them all the way across, correct? So if you've got all those, we know that everything else must be right. Now, this up here on the top essentially is a profit and loss statement, isn't it? It's an income statement. When we make those sales, 71.5 in January, do we have the money? Do we have the money yet? No, he's selling on credit, isn't he? We're going to find that out, but he's selling at least some on credit. Turns out it's all on credit here. So he doesn't have the money yet. Why does he record it as sale? Because he's recognizing it when the ownership of the product has transferred to the buyer. He doesn't have the money yet. We call this what kind of accounting? Accrual accounting, meaning we recognize our revenue when? As the guy on TV used to say, when you earn it, right? When you earn it. Yes, John Hausman, that's correct. And you recognize your expense when? When you incur it. So we are always, what's the term? Matching the revenue we earned against the expense we expended to earn it. So it tells us very clearly whether we made a profit. But it doesn't give us much insight about what? Cash flow. So we need lines 13 through 25 to check that out. You with me on this? That's lines 13 through 25, January and February. I'm going to work through these, and then you're going to do the rest of them. And you'll have your facilitator to support you. Now, beginning cash. Where did we get that again? Somebody help me. That was the ending cash from December of last year brought forward into this next year. Just like you bring your check. This is lines 13 through 25. What is that? It's your checkbook. It's your company checkbook, in effect, isn't it? And then we've got some collections that are going to be coming in, and we'll talk about that in a minute. And the amount we started with, plus everything that comes in, on line 16, that's going to give us the amount of money we have to spend. But we are not going to let that number stop us, are we? Because we are going to grow. There's two lines here that are highlighted. This is going to help us a lot. The first one, line 16, says how much money we got. The second line, line 24, says how much money we're going to write checks for. So that difference will be where we end up on line 25, our ending cash position. It's really very logical. I think sometimes all the numbers and all the lines, people just go, and you have to go, poof. Just get them out, defibrillate them, okay? When we end up on line 25, overdrafted, what are we going to do on line 26? Borrow. We're going to borrow, and we're going to borrow all short term for right now, even though I railed against that earlier, okay? We can fix it later in the next section. And then we'll have an ending cash on line 28. All right? So there's a couple of things we need to know about the pattern of this business, and I want to visit them now. Number one, his inflows. His accounts receivable collection period is how many days? 60 days. So from the time he sells it, it takes 60 days to do what? Show up. And it's going to show up on what line? Line 14 is where it's going to show up. So now what I want you to know is put your finger on the number, line 14, January. What's the number? 59. And that's going to represent the sales from when? Which November? Last November. Somehow people sometimes fritz out, they wig out, and they try to go to next November. Doesn't work. Last November is what he's going to collect. If you could collect next November's sales in this month, January, that would probably be called a deposit, right? Because it hasn't happened yet. Last November, and I'm telling you because you have no way of knowing. I also put it on your cash flow form. You've already spotted it up there above the sales line, last November, right? Last November, 2 months off comes in on line 14, and December sales of 64.8 will come in February, line 14. You with me? So what will come in? I want you to fill in one more line here. What will come in March on line 14? Sales from January, 2 months earlier, which we projected to be 71.5. You with me? And some of you are just taking this opportunity to fill those babies in all the way across because there's only a couple left now, isn't there? And that works great. All right? So that's how we bring forward the receivables because we've got to show collecting them. Now the other thing we need to know is, and we've got that on the top of your projected inflows and outflows of cash. I told you the same thing. Now in the middle of that same page that you're looking at, outflows. There are 6 ways he spends his money. This is his spending pattern. Are you with me on this? Spending pattern. Let's just review them for a minute. The first one, he's going to buy some equipment. How much? $15,000. What line do you think that ought to go on? 20. Line 20. Capital purchases. What month? February. So fill that puppy in. Taxes. What line do you think that ought to go on? Line 21. How much? 31. What month? May. So you're going to go down to line 21, across to May, and when you've done it, you're going to check it off. Check it off. You with me? Number 3, general operating expenses. How much are they from line 4? Line 4. 25.6. Line 4, not line 6, because that includes depreciation, which is not a cash expense, right? Okay, cool. Now, you remember that long-term debt he had, or that short-term debt? What does he want to do with it? It was $165,000. I remember that. What does he want to do with it? He wants to make it what? Long-term, spread over 4.5 years. We don't know that the bank's going to do this yet, but that's what he wants. How much a month on the principal? $3,000. What line? 22. Line 20. Got to be above 25. 22. Line 22. What does it say? Principal long-term debt. That would be the clue. $3,000. What month? Every month. Starting what month? January. All the way across. We're cooking here. We only got 2 left. And then we'll have the pattern. Accounts payable. We'll follow purchases by 2 months. You with me? And what line are we tracking his purchases on? Line 12. We're going to buy it on line 12. We're going to pay for it on what line? Accounts payable. What line? Line 17. Line 17. Now, I got to get you started here on line 17. What are we going to pay for on line 17 in January? The purchases from when? 2 months ago. 2 months ago, and I put that right above line 12. What was last November's purchases? 47.6, and they're going to come in on line 17 2 months later. You with me? And December's will come in February, and that's going to be to the tune of how much? 57.3. Now we got one more. We got one more item to check off. Past due accounts payable, which are 39,000, will be paid off. He's got a payment plan here that he's worked out with it. That's what he's telling his suppliers. Keep shipping me, and I'll get something to you every month. $4,000 a month, and if there's 39,000, that means there's going to be 9 of those and $3,000 to cover the little bit that's left. What line are we going to pay this on? Line 18, $4,000 all the way across for 9 of them, and then that would make $3,000, I think, in October. Is that right?
Mm-hmm. Yep.
Okay. So what I want to do is I want to go back and fill in my cash flow, and you can help me because you've already done part of it. So his beginning cash in January, help me here, is $6,800. His collections in January are $53,900. Is that right? February, I think, is $64,800. The sales from December, yes? The $71,500 from January will come in over in March. That would be like over here, wouldn't it? Now, January only. How much cash is he going to have available to spend? He's got $6,800 to start the month, and $53,900 comes in. So on line 16, how much will he have available to spend? $60,700 to spend. You with me? Mm-hmm. What is he now going to do? Spend it. This is the fun part. This is when he goes to the trade show with his wallet. Accounts payable. How much were they in January, somebody, from the prior November? 47.6. And help me fill in February.
57.3.
Thank you, 57.3. I'm just building January and February. Past due accounts payable, as I recall, they were $4,000 a month. Is that right?
Yes.
That's right. Okay, 4,000. 4,000, like so. General operating expenses would be 25.6. Is that what you all have? 25,600. Okay, that's cool. 25,600. That's good. Capital purchases. How much is he buying again? Nothing in January and 15,000 in February. And right now, I know some of you are wondering if he wouldn't put that on some kind of a note, a loan, and we could, but right now we're not projecting that, okay? We may go back and adjust that, and he may buy it on a loan, but he's got enough loans right now. His taxes are, what were they, $3,100 out in May, so that doesn't show on my screen, but you've got it on yours on line 21. Principal long-term debt, how much? $3,000, exactly, $3,000. Now, here's what we need to know. The other gray box. Who's added it up as how much going out in January? 80,000 what? 80,200 going out. Are we cool? No, that's the right number, but that is not cool. And how much is going out in February? Just line 24. Don't try to work anything else. If you do, you'll blow up. Okay? If I hear this, I'll know that you blew up. So how much is February? Somebody who's added up lines 17 through 22. Or who is about to.
104,900.
104,900. Thank you so much. All right. Any questions to there? This is pretty straightforward stuff, isn't it? January. He's got $60,700 to spend, and he spends $80,200. What does that make him? Normal. No, it makes him overdrafted. Isn't that right? To the tune of how much? Don't do February yet. You're in blow-up territory if you do. 19,000 what? And how are you going to indicate that on your cash flow? What sign? Brackets, thank you. Okay, now here's the rules again in the Bank of Lefevre. You cannot end the month overdrafted in my bank. You must borrow. And you must borrow short term. And the other thing I need to tell you is, for efficiency's sake, we only have one currency. It is a $5,000 bill. That's all we have. So you must borrow enough in increments of 5,000 to get positive on line 26. How much are you going to write yourself a loan for?
20,000.
Well, do it. 20,000. Just write it in. Now, wasn't that easy? People say borrowing is hard. You just did it. All right. So how much will he end line 28 with in cash? $500 what? $500. Okay, and don't start the next month yet. Stop that. Short term, you got to fill in line 29. You remember he took that $165,000 of short term and made it long term, and he's paying it off at how much a month on the principal?
$3,000.
Remember that? That's right there, $3,000 on line 22. So if he starts with $165,000, if he starts with $165,000, it's going to go down to what? 162, 159, like so. You with me? And his cumulative short-term loan, or his total, he started with 0 and just borrowed how much on line 26? 20. Line 29 will now be how much? 20,000. Was I clear on that? So on line 29, we're tracking our cumulative short-term borrowing. On line 26, we're borrowing it by month as we need it. Does that make sense? Okay. Now, how much will we start February with? We're now ready to go on to February. $500. How much is going to come in on line 14? $64,800. So how much will he have available to spend? $65,300. And he's going to write checks for how much? $104,900. So how much will he OD? What? $39,600 with what sign? No, brackets. And how much will he borrow on line 26? 40, because he has to borrow enough to get positive in increments of 5. And his ending cash will be how much? 400. His cumulative borrowing will go from 20 up 40 to what? 60. Everybody copacetic on this? And his cumulative on line 30 will drop down. His long term will drop from 162 down to $3,000 this next month as well. You with me? Okay, what I want you to do is finish the rest of this to June, only to June line 25. And when we get back together, we'll take it from there.